In the annals of financial history, few names resonate as powerfully as Warren Buffett and Charles Munger. These two individuals have transcended the realm of mere investors to become the embodiment of unparalleled success in the world of finance. Their journey has led them to forge an empire that stands tall among the largest and most triumphant in the global landscape. At the very core of the Berkshire Hathaway, they have consistently orchestrated a symphony of value creation, deftly maneuvering through the intricacies of the market and fearlessly embracing unorthodox investment strategies. Their ascendancy is not a mere stroke of luck, but a testament to their extraordinary investment acumen, unwavering discipline, and a steadfast commitment to ethical conduct. So today, I'll take you to Warren Buffett and Charlie Munger's Secrets of Wealth. If you're new to the channel, hit that subscribe button and that little notification bell icon so that you don't miss out on any of our video updates. Plus, it helps us spread the Thrive Wise love to help more people thrive wisely. Now, let's begin. The purpose of today's video is to delve into the very essence of their investing approach, laying bare the secrets that underpin the remarkable saga of Buffett and Munger's triumph. To unravel the tapestry of Berkshire Hathaway's success, one must embark on a journey through time, tracing the origins of both Warren Buffett and Charles Munger, and observing how their paths, which were seemingly destined to converge to fashion a partnership etched within the annals of history. Warren Buffett, born in the heartland of Omaha, Nebraska in 1930, exhibited an innate grasp of numbers and economics from his earliest days. Nurtured by his father, Howard Buffett, a stockbroker turned congressman, young Warren was introduced to the realm of finance and investing even before he could fully comprehend its gravity. A mere 6 years old, Buffett embarked on his maiden entrepreneurial venture, peddling chewing gum door to door as a paperboy for the Washington Post. His meticulous record-keeping of the customer's preferences hinted at the analytical prowess that would shape his future. Similarly, born in 1924, Charles Munger's narrative bore echoes of resilience, frugality, and diligent labor. Emerging from the crucible of the Great Depression, Munger imbibed invaluable lessons in thrift, value, and the sanctity of hard work. His father, Alfred Munger, a lawyer by profession, instilled in him an insatiable hunger for learning and an unwavering curiosity. It was this shared backdrop of humble beginnings that laid the foundation for the intertwined destinies of these two investing giants. Their paths would serendipitously cross in 1959 at a dinner gathering in Omaha, orchestrated by a mutual friend, Edwin Davis. The age gap of a decade initially stirred reservations in Buffett's mind, yet the moment they commenced discussing their mutual passions, which were business, investing, and philosophy, all doubts dissolved into the ether. In Munger, Buffett discovered a kindred spirit, impassioned about investing, while Munger found in Buffett an intellectual equal, whose insights resonated deeply. Thus commenced a partnership that has stood the test of over 6 decades, resulting in the birth and unparalleled success of Berkshire Hathaway. Despite their modest origins, both Buffett and Munger exhibited an uncanny knack for understanding business and investing. Their shared aptitude for recognizing opportunities and predicting market movements foreshadowed their remarkable future achievements. Yet, the true alchemy of their partnership lies in their symbiotic relationship. Melding their wisdom and perspectives, they fashioned an investment philosophy that consistently eclipsed market benchmarks. Warren Buffett, affectionately dubbed the Oracle of Omaha, emerged as the charismatic face of Berkshire Hathaway. His sagacious wisdom and acute investment acumen became emblematic of the conglomerate's identity. In contrast, Charles Munger's preferred to cooperate discreetly behind the scenes, serving as the philosophical and intellectual lodestar. His insights provided a compass for the duo, guiding them through the labyrinth of investment decisions. This dynamic partnership, as best described by Buffett himself in a 2014 interview, is perhaps best encapsulated in his words. Charlie shaves away the nonsense, the baloney, and he lets me know when I start drifting into it. In the early chapters of their collaboration, Buffett and Munger embarked on a journey of acquiring companies, employing an innovative investment strategy that favored long-term value creation over fleeting gains. This revolutionary approach defied the prevailing short-term mindset of the era, setting the stage for what would evolve into a colossal edifice of Berkshire Hathaway. Their shared vision, amplified by their unique strengths, became the bedrock upon which Berkshire Hathaway would flourish. The growth and triumph of their venture underscored the potency of a shared ethos, marked by unwavering discipline and a harmonious interplay of complementary talents. This combination paved the way for an extraordinary empire that stands as Berkshire Hathaway today. Central to the Buffett-Munger investment doctrine lies the realm of value investing, a concept embraced by both individuals and progressively refined to mirror their evolving insights into markets and enterprises. The origins of value investing trace back to Benjamin Graham, affectionately known as the father of value investing. During Buffett's tenure at Columbia Business School, Graham served as his mentor and expounded the notion that successful investing hinged on identifying and investing in stocks that traded below their intrinsic value. However, the application of this philosophy by Buffett and Munger underwent a metamorphosis beyond Graham's foundational teachings. The duo ventured beyond a myopic focus on numerical underevaluation and began to accentuate the qualitative facets of a company. Their attention shifted towards robust competitive advantages, popularly coined as moats. These moats, as Buffett and Munger showed, could manifest through factors like brand strength, economies of scale, network effects, regulatory advantages, or superior managerial prowess. By zeroing in on enterprises fortified by such moats, their strategy aimed to capitalize on enduring dominance of these companies over time. By the way, if you're enjoying this video, please take a moment to like and subscribe. It really helps us spread the Thrive Wise love, so we can help more people thrive wisely. And going back, a quintessential exemplar of this approach emerged through their acquisition of See's Candies in 1972. While the purchase price appeared at odds with conventional value investing principles due to its premium overbook value, Buffett and Munger discerned a different narrative. Beyond the figures, they recognized the company's potent brand, custom royalty, and pricing power. This foresight bore fruit, as See's Candies amassed over $2 billion in pre-tax earnings, far surpassing its initial cost. Another pivotal instance illustrating their unique perspective was their investment in Coca-Cola in 1988. When Berkshire Hathaway commenced buying shares for this company, the stock wasn't trading at a steep discount. Rather than fixate on immediate bargains, Buffett and Munger honed in on Coca-Cola's enduring brand power and global reach, embodying their commitment to long-term potential over transient gains. Undoubtedly, one of the cornerstones of their investment philosophy revolves around the significance they attribute to high-quality management. This emphasis on leadership prowess and integrity has steered them towards forging enduring partnerships with figures like Ajit Jain, entrusted with overseeing Berkshire's insurance operations, and Greg Abel, the vice chairman overseeing non-insurance operations. In this context, their investment doctrine transcends numerical metrics on financial statements. It delves into the intangible and illuminates the longevity and resilience of a business's competitive advantage. The crux of their philosophy lies not solely on recognizing value, but in identifying the latent potential for that value to burgeon over time, catalyzed by the right circumstances and adept leadership. This unique investment ethos, often dubbed the Berkshire Way, reflects the harmonious blend of patience and discipline that defines Buffett and Munger's legacy. In a landscape marked by the allure of rapid returns, their unwavering commitment to a long-term investment strategy is a beacon of principled resilience. This commitment finds expression in their buy and hold strategy, a practice that sets Berkshire Hathaway apart in a market categorized by frenetic trading and transient trends. Unlike many contemporaries who succumb to the allure of frequent trading, Buffett and Munger adhere to their time-tested philosophy. They contend that innocent trading not only incurs unwarranted transaction costs, but also distracts them from a profound understanding of their investment's intrinsic performance. A clear manifestation of their investment patience is vividly illustrated in their journey with the Coca-Cola Company. As mentioned earlier, in 1988, Buffett initiated the acquisition of Coca-Cola shares with a calculated investment of approximately $1 billion, translating to a 6.2% stake in the company. At the time, the stock didn't present an overtly attractive proposition, and prevailing sentiments were ambivalent, if not pessimistic. However, Buffett's sagacity discerned the indomitable strength of Coca-Cola's brand and its global resonance, illuminating a path of long-term prosperity. Fast forward to the present, where Berkshire Hathaway now commands a stake of 400 million Coca-Cola shares, an investment valued at over $20 billion. This monumental return on investment, a testament to their strategic patience, it underscores the prescient wisdom that guided their decisions. So in essence, the Berkshire Way signifies more than an investment strategy. It encapsulates a philosophy infused with an unwavering commitment to sustainable growth, as well as an uncanny ability to envision value's evolution over time. Buffett and Munger's legacy is not merely the accumulation of wealth. It is a legacy of prudent stewardship, patient allocation of capital, and an enduring faith in the intrinsic strengths of businesses. So as their journey continues to unfold, their unique investment doctrine serves as an enduring beacon of inspiration for investors, entrepreneurs, and visionaries alike. In a world where the allure of immediate gratification often eclipses long-term vision, the Berkshire Way stands as a resolute testament to the enduring virtues of patience, discipline, and the pursuit of lasting value. Well, that's basically Warren Buffett and Charlie Munger's Secrets of Wealth. And thank you guys so much for watching today's video. And hey, it seems that YouTube thinks that the next video can completely transform your financial situation. Watch it to find out whether they're correct. And please don't forget to click the subscribe button to see more videos on how to thrive wisely. Till next time.